Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, good afternoon to you and welcome to the COB, whether you're watching us live on ausbiz.com.au or listening to us in podcast form. We're glad you're here. Now, today, the local market did go from, sort of the low point just before the noon hours, you can see there. Recovered some ground as the session wore on. Still, though, down by about 0.4%. We have seen European futures, that includes DAX futures, FTSE futures, trending lower throughout the day today. And we've been keeping a very close eye on US futures as well. E-minis, both NASDAQ and S&P 500 are still in negative territory. We've got the S&P ASX 200 at 8,476, so down 0.3% as the last of the day's trades go through. So we will bring you across all of the detail again at the end of this episode of the COB. Safe to say, though, while it's negative around most of the Asian region, we are seeing China's markets push a bit higher today. And so if we look at, what our key themes are, obviously a lot of it has to do with markets really being on tenterhooks in the wake of the US bombing of Iran yesterday, waiting to see what Iran will do in retaliation. Still an unknown. We did see oil rise with Brent pushing to that $80 per barrel level, but it again did retreat as the session wore on. And so we continue to keep an eye on not just what's evolving on the geopolitical front, but with the price of oil, with the US dollar. Tensions do remain high. There has been bombing of Israel by Iran today. And again, we're just waiting for what Iran might do in retaliation as the US president puts out on his Truth Social that there could be a cause for regime change in Iran. All right, so sector-wise, what happened here today? Obviously, we were watching energy with much interest, and the energy names were performing, much more significantly to the positive side when the trade just got underway today. As a whole, energy looks like it's just barely clawing on to positive territory. You could see Woodside there trading at $25.89. I had a really great chat today with Vanda Nahari from Vanda Insights. She sees it a very, very, very low risk that Iran will choose to close the Strait of Hormuz, and she reckons that it looks as if markets are anticipating some sort of a cooling in tensions there. But historically, oil supply shocks don't last for very long. Now, gold is an interesting one. You would have thought gold would majorly outperform, but the price of gold actually waning in Asian trade. And taking a look at some of these gold-related stocks, just Newmont in positive territory, up by 1.5%. Here's a look at the tech sector as well. So we've got technology as a whole down by about 0.7%, though some individual performances coming through for the likes of Xero and NextDC, as you can see, both finishing in positive territory. Well, in other news, Woodside Energy has agreed to sell its LNG to Japan's biggest LNG importer, JERA, during the peak winter demand period in Japan. Metcash had a great day on market today, reporting a 10% increase in statutory profit after tax in the full year, reaching $283.3 million. JB Hi-Fi will pay a penalty of close to $14 million after it reached an agreement with the ACCC regarding alleged advertising mispractices. Elsewhere, Stockland will distribute 17.2 cents per share for the second half of FY25. Alcidion has hit a 4-month high after hiking its FY25 earnings forecast. That's a pretty solid performance being put in there, bringing shares to 10 cents per. Let's get some analysis on all of that, shall we, with Josh Gilbert, who is joining us from eToro. Josh, clearly geopolitics are front of mind as we make our way toward the US Open.
Yeah, absolutely. I mean, it was sort of the dominant conversation, at the weekend as we moved into sort of today. I mean, that sort of risk proxy of markets is obviously Bitcoin and crypto assets, given they trade sort of 24/7. So we saw Bitcoin fall to below 100,000 and Ethereum slightly more so than that over the weekend. But I think what we started to see is that investors would kind of feel that this uncertainty in markets is the new normal. I'd almost say that geopolitical tensions have been sort of a thing in markets now for many years, and investors are ultimately taking it in their stride. And I think that's why we're sort of seeing the reaction in markets today, right? We had that oil spike at open. Now we've sort of seen most of those gains being pared, and US futures pretty close to breaking even as well. So I think that unless we get a big escalation, I guess the big part of this is that we're probably waiting to see the reaction coming through. But I think for now, investors taking in their stride, a relative sense of calm, I would say. So unless we sort of see tensions keep rising, which to be clear, it definitely has the potential to do, I think we may see markets sort of continue to trade pretty range bound. But I do think it will have a bit of a hit to risk sentiment ultimately, and I don't think we'll be seeing huge moves to the upside. But maybe not anything too crazy to the downside either.
Got it. So when we're talking inflation, obviously we're talking oil prices now, the flashpoint right now. But we had Christopher Waller from the Fed. He's an FOMC member, saying that the Fed could actually cut as early as next month. He doesn't reckon that any inflationary impact from tariffs will be long lasting. But like the spanner in the works when it comes to the inflation reads worldwide right now will have to be oil.
Yeah, and I think that's the big thing, right? I think for equity investors, I think the key risk isn't just that geopolitics. It's not sort of maybe the uncertainty. It's what we're going to see feeding through into inflation over the months ahead. So, obviously we're still waiting for that full tariff impact. And really, I think over the next 15, 20 days, we're going to sort of see more around tariffs again. I think those pauses are going to be sort of unwinding pretty soon as well. So that sort of fallout is going to come to sort of rear its head again. But really, it's going to be what does higher oil prices mean for inflation, and then those rate expectations. I think that's where investors' sort of longer term concerns are going to lie short term. We're going to get some US PCE data at the end of the week. We're also going to get CPI here locally as well. So I think inflation will be front of mind absolutely this week. But I think oil is certainly going to be a read on the rest of the market, given the uncertainty that we're seeing. So yeah, I certainly think that that's going to be front of mind for investors this week, and I think we'll be looking towards those tariffs as well, because although we're hearing that they won't have an impact, I think that Jerome Powell certainly believes that they may do it, hence why we're sort of seeing the market push back on rate cut expectations.
Yeah, I was speaking with a guest last week who said the market seems very relaxed right now about the looming July, is it 7th or 9th deadline for the potential tariff increase if the deal has not been done. And you've got to think all those people in the US, the administration has plenty on their plates at this time. Okay. So look, corporate-wise, this week we get Nike earnings. This has been an interesting one as of late, particularly to see demand coming from China. What are you expecting, Josh?
Yeah, not really been a great, I'd say, couple of years for Nike, really. A bit of a failed direct-to-consumer strategy, really struggled with sort of weak consumer demand, as you mentioned, in China. Inventory levels have remained really, really high. And then, on that side, when you then having to discount margins to get rid of your inventory, when you're discounting items, there's going to be a bit of a pressure on margins. So, look, the market hasn't been pleased with whatever they've delivered over sort of recent months. They've beat earnings expectations 6 times in the last 6 earnings, and every time they've fallen. So a beat doesn't mean that it's going to be good news to the market here. And looking at sort of options pricing, about an 8% move either way. So we're going to get a bit of volatility. Ultimately, what we're sort of trying to see from Nike is the new sort of CEO, Elliot Hill, who'd previously been with the company for a long, long time, coming back in, really trying to sort of grab the ball by the horns and go back to sort of the what they're known for, back into sort of sportswear, back into sort of the items that have really built the brand for who they are today. And I think sort of following in the strategy of something like Adidas are coming off of a really good couple of years, really dialed into sort of their Samba and those sort of traditional footwear lines that have done really, really well. So for me, we're going to be looking at the effect of tariffs, absolutely. So is that going to have an impact on gross margins? Markdowns, obviously, across the world, we're going to see sales decline, everywhere, but China, again, is going to sort of see continued weakness. I think for investors, we've had a lot of promise coming from the company, a lot of promise coming from Elliott Hill, but I think at some point investors are going to want to see this coming through. They want to see these plans to restore wholesale partnerships and the push into new products bearing fruit, driving profitability again and growing their market share. So until that happens, I think investors are going to need a bit of patience, but I think that patience is running thin a little bit. So look, it's certainly not going to be an overnight success for Nike, but I think they're going to need to deliver something this week, or else investors are going to, as I say, run out of patience.
Okay, so we'll be watching that one. Just do it, Nike. All right, let's get to, well, I suppose the big corporate story here locally continues to be the listing of Virgin Australia. Do you anticipate it will trade well upon its debut?
A lot of excitement, I think, around the Virgin IPO. We've been a bit unfortunate, haven't we? We haven't had a lot of exciting IPOs come to market on the ASX over the last sort of year or so. Again, maybe we can put that down to sort of what we've seen in global markets over, the first 6 months of this year. But probably the most exciting name, I would say, since maybe GYG coming through. So I think there will be, a fair bit of anticipation. It's a high-profile name. It's one of, only 2 airlines here in Australia that dominate this sort of domestic market, and we know that it's a very profitable domestic region, right, for flights. So Qantas has obviously traded very, very well. Global airlines have traded very, very well over the last couple of years. But again, when it comes to airlines, and particularly something like Virgin Australia, margins are pretty wafer thin. And what we're seeing coming back to oil at the moment, that's going to be a bit of a worry, right? We've had lower oil prices for a long time, which has been good news for airlines, for their margins and their bottom lines. But if we're starting to see a rise in oil prices, that's going to have a bit of a worry over what we can expect coming through from earnings. But look, no doubt that Bain Capital have done a very good job in sort of this turnaround for Virgin Australia. They streamlined operations, sort of cut unprofitable routes and focused on ultimately those domestic routes that are very profitable and the highest revenue generators. So I think there will certainly be interest, particularly given what we've seen from Qantas shares over the last year or two. But I think there will be a little bit of investor caution in the background, given some of those points I just mentioned.
Wonderful. Josh, look, it's a good one. So we're watching the European Open with much interest. What, though, do you make of this market trading at 8,474? So we fell below that 8,500 level really last week, down by about 0.4%. Technically, how is this market looking?
Yeah, I think that, when we have sort of spoken to investors recently, I think what they're sort of trying to look at from, an ASX perspective is that we're sort of seeing maybe that dominance from a US perspective, sort of unravel a little bit, right? So we're starting to see that investors are pulling away a little bit from US investments, maybe coming a little bit closer to home where we have that maybe a bit more sort of economic stability. And I think we kind of maybe can, estimate what we're going to get a little bit more locally. So we've certainly seen that with our investors, that they are sort of pulling back on US investments, and some of that cash is coming locally. Still seeing a big push to sort of gold as well. But I think from an ASX perspective, when we look at levels and what we're seeing from a fundamental perspective, I think what our investors are looking at is those sort of future earnings growth. Earnings growth this year, as we know, is probably going to be slightly tepid. But if we look to sort of 2026 and 2027, looks a bit brighter. So I think that short term, we're certainly going to see this uncertainty play out in markets. But as I said right at the start, right, I think that investors are taking uncertainty into their stride at the moment. So unless anything from a geopolitical level really bubbles up and we see sort of a big reaction coming from Iran, then I think that this is going to be something that just fizzles out and markets continue to trade higher.
Wonderful. Look, Josh, always a pleasure to start the week with you. Thank you.
Thanks so much, Nadine. Have a great week.
You too. Josh Gilbert from eToro. So we will continue to just take a look at some of the stock moves today. What I didn't mention in the introduction, and I really should have, is Adairs. Adairs absolutely tanked today after it came out with a profit warning. David Lane from Ord Minnett and Kai Chen from MPC Markets weighed in.
A number of different things that contributed to that downgrade. As you said, the increase in costs. So the sales revenue at Adairs were better, but it cost them a lot more in terms of their promotional advertising to get those sales. And the real drag on the business, not just in this result, but in the last couple of results, has been focus on furniture. So their low-cost brand hasn't really hit the mark, and their sales have declined fairly significantly there, and their earnings are down quite a bit.
The core segments for Adairs are still fairly robust. So as David mentioned with Mocka, they're doing well, but it's a small segment. And as a whole, they are okay, but the margins are a little bit skinny. So, I don't think, given where the broader market is heading, I think there's a bit of risk on the table. It's not a sector that we're really interested in getting in at the moment. I think there's a bit of risk on the table.
Yeah, no-go zone for those guys at this time. So let's take a look at what led this market higher. Metcash, as we said, in the wake of its full-year results. Reese is an interesting one. I was keeping my eye on this earlier this morning. I don't really see any news, but it's up by a pretty solid 3% on a day like today. Lifestyle communities, a continuation of some of the good sentiment that was around it last week. And we saw lithium really take a leg down on Friday, so a bit of a rebound for Liontown Resources. And we had BWP Trust coming out with its distribution estimate today. So shares up by 2.2% to $3.67. Now, Adairs won't show up on this list of the losers, and that is because, of course, it's not in the 200. But by percentage change, Bellevue Gold was down Digico. Iluka was off by 4.74% to $3.42. And just keeping our eye on Boss Energy and Zip as well. Boy, Zip has been a bit of a favorite coming through for many of our expert guests. Not today, though, down by 4% to $2.75. Look, this is the smaller end of the market. 3P Learning, looking good, 3P Learning. I'm just seeing if there's any news that I can see coming along with that. No, not really. Shape is up by close to 11%. And SmartPay putting on 11% as well. There's Adairs, finished down close to 20% still in the uranium space, Alligator Energy, and then you've got a few of those other commodity plays on that list of losers. So tonight, we do get a continuation of the PMIs. We got a PMI here in Australia today, so we get that out of the UK and the EU. We are expecting to see well, I don't really know exactly what we're expecting to see, but we'll be watching for any signs of a slowdown there. Get the PMI in the US as well as existing home sales. And we're getting a little bit more Fed speak with the FOMC member Bowman speaking. I mentioned Waller was indicating there could be a cut sooner rather than later. So it's one of those weeks we get a few of these random out-of-cycle earnings. Collins Food is next up. We have a couple of investor briefings. Don't forget that Treasury Wine Estates, after issuing that downgrade, flagged that they would be talking about the business outlook tomorrow at its investor briefing. So we'll be watching that one with much interest as well. Here is a final picture of the CBOE Australia Index, closing down by 0.35%. The S&P ASX 200 mirrored those losses, so at 8,474. Still looking at E-minis in the US, coming under pressure, still waiting and watching for any retaliation by Iran because of those US strikes. Donald Trump talking about regime change being possible. And I'm just quickly checking to see if we've got those PMIs in Europe yet. We do not, so we'll have to wait for that one. Oil at a 5-month high, and we'll keep an eye on those key commodities through the overnight period as well. Just before we go, one more thing from me. A reminder about our next virtual investor event, the ABCs of Derivatives. Derivatives, I've learned, can be used in your SMSF strategy, so I'll be chatting with Liz Tan from Citi about that one. Derivatives can be used for downside protection, extracting yield, so I'll be speaking with StroPro about that, and we'll also find out how an outperforming hedge fund gains exposure via derivatives, as well as what's happening on the digital asset front. It's going to be good. Get the ABCs of derivatives. I'll be learning alongside you. Thursday, 1 p.m. Registration is free. And as always, if you're registered, you can watch live or at your leisure on demand. You go to ausbiz.co/derivatives. That's it for the COB. Thanks for joining us. We look forward to joining you from 9:45 tomorrow morning. I really hope you have a great night.